Hello everyone, good morning and a very warm welcome to today's webinar all about sick pay in Sage 50 Payroll. My name's Duncan, I'll be hosting the session today and I am joined by my colleague Sarah, who's standing by in the background, ready and waiting to answer any of your questions. Let's now take a look at what we'll cover in the webinar. So we'll start with an introduction to statutory sick pay, outlining some of the legislation, qualifying conditions, and the rules of operating SSP. And we will also touch upon some of the significant changes that are coming in April 2026. So just to give you a heads up about those and what to expect as we move into the new tax year. We're then going to give you some demonstrations, starting with how you can record sickness for an employee. So a couple of different methods I'm going to show you, including the absence diary and the quick SSP screen. We'll show you where you can check the calculated SSP amount and then how to adjust your employees' payments, either using the Make Up Basic option or by doing manual adjustments to the basic pay. And we'll finish with a quick section on troubleshooting. So I have 5 areas for you to check if you ever notice an issue with SSP, and that should point you in the direction of what perhaps needs to be looked at. We'll then run through some of the further support available, some of our other support resources, and we'll stick around just to make sure we have answered as many of your questions as possible. So let's get straight on with our introduction to SSP. So what is SSP? Well, it is short for statutory sick pay, and it's a payment made to employees when they're ill and unable to work. You may pay your staff more than statutory sick pay if you have a company sick pay scheme. That's sometimes known as occupational sick pay as well. But we're going to focus mostly on the statutory payment today. But we will mention the Make Up Basic option for those of you that want to pay your employees their usual wage, but still record the SSP element. Now, SSP is paid at a flat rate currently of £118.75 per week, and that is payable for a period of incapacity for work of up to 28 weeks. And that's the flat rate that applies to the 2025 to 26 tax year. But there are some changes to the rate of SSP coming from April 2026, which, as I say, we'll mention in a few minutes' time. Now, in order to receive statutory sick pay, employees must meet the qualifying conditions. So current qualifying conditions are that an employee must have an employment contract and have started work for you under that contract. They will need to be off sick for 4 or more days in a row. That can include non-working days, and that is known as a period of incapacity for work. So PIW for short. And you'll hear me say PIW quite a lot during today's webinar. They also need to be earning at least £125 per week, which is the lower earnings limit for national insurance. And they'll need to give you notice and proof of illness when needed. So employees are able to self-certify for the first 7 days of sickness. Beyond that point, you are able to ask for medical evidence where required. And they would need to inform you of their absence, either within your agreed timescales or within 7 days of the sickness if you don't have an agreed timescale. And you can read more on the official guidance for this on the gov.uk website. So a few general rules of the SSP scheme. So SSP is only payable for qualifying days, and these are the days that your employees would usually work. You'd pay SSP on your employee's normal pay date, at the same time you would have paid them normal wages. Currently, the first 3 qualifying days of a PIW are known as waiting days, and there is no SSP payable for those first 3 days. So the payment itself would kick in from day 4, or the 4th qualifying day of that sickness. Now, if an employee has been off sick and returned to work, but then go off sick again within 56 days or 8 weeks of their previous PIW, the following sickness is classed as a linked period. And what that means is that the employees would not need to serve the waiting days again. However, they do still need to be off sick for 4 days or more to receive SSP, and it's just they would receive SSP for all of those days if the period links to a previous PIW. And that link period would count towards the maximum kind of SSP they can receive, which is 28 weeks. So that is how it works currently, up to and including the 5th of April of this year, 2026. But I do want to tell you about the planned changes to SSP under the government's Employment Rights Bill, or the Employment Rights Act, as it is now law to achieve royal assent. So with effect from the 6th of April, SSP is changing pretty significantly. So first of all, the waiting days are being removed, meaning that statutory sick pay would be payable from the first day of sickness. The earnings requirement, so having to earn £125 per week, is also being removed, which would make all employees potentially eligible for SSP, regardless of how much they earn. And then the rate of SSP will be changing. So it will become the lower of either the SSP weekly rate, so the flat rate, currently £118.75, but that will increase from the 6th of April, or 80% of an employee's average weekly earnings. And that would be calculated in the set period leading up to the first day of sickness. Now, we will release a software update to incorporate these changes in the legislation. It will be part of your payroll year-end update. So nothing you would need to do, rather than, apart from kind of be aware of these changes. And I have linked to the fact sheet on gov.uk on the statutory sick pay changes, so you can read more about how that's going to work by following the link there on your handout. So we'll also talk more about this in our payroll year-end webinars. Will be taking place nearer the time. So do look out for sessions in the future if you want to learn more. Now, we are going to focus on statutory sick pay as it works now. So first thing we're going to take a look at is how you can record the sickness in Sage 50 Payroll. And once you've done that, the statutory sick pay itself will be calculated automatically for you. So when we go through the demo, we're going to focus on two methods of recording sickness. The first one is entering that sickness directly in the employee's absence diary. So that can be found in the employee record. But you can also find a version of it within Enter Payments. The second way you could record SSP is using the Quick SSP screen. So it gives you a few additional options. You'll be able to print a report, for example, of the key SSP information, and it's probably more suited to when you're first setting up SSP as opposed to extending a period of sickness for a sickness that is kind of ongoing. But we'll show you both methods, and then it's down to personal preference how you record the sickness. Now, once the sickness dates are recorded, it will create absence entries on the absence diary. So it's useful to get familiar with these entries. The letter X signifies a waiting day. So you would find 3 of these at the start of a PIW. The letter P indicates a qualifying day where SSP is payable, so a paid SSP day. A dash is a non-qualifying day. A red A means that you've entered a sickness that is less than 4 days in a row, so it doesn't form a PIW. And a pink W is a SSP that is withheld, either because you've indicated the employee doesn't meet the eligibility, or more commonly, when a PIW has reached and exceeded 28 weeks. So you will need to define the qualifying day pattern for your employees. We're going to show you this in the demo. It will consist of N's and Q's, indicating non-qualifying days and qualifying days. And that will determine waiting days and paid SSP days for the period of absence you are recording. Now, a quick note on qualifying day patterns. If you have staff that don't have a set working pattern, the rules allow you to agree a standard working pattern for them for SSP purposes. So that might represent the days of the week that they could work, should you need them to work. So it might be Monday to Friday if your business operates during working days. Could be that every day is classed as a qualifying day. As long as you've agreed that with these employees, you would be able to use that standard working pattern for their SSP calculations. Once you've got your qualifying pattern in place, it's then a case of recording the absence. So you can see what the absence entries looks like on that screenshot, and you'll be able to check the SSP payable and the number of weeks that you're paying in the Enter Payments screen. So that's how it all works. Let's bring that to life for you now by giving you a couple of demos. So for today's demos, I am running a monthly payroll. The steps are exactly the same for any other pay frequency, such as weekly. And when it comes to recording sickness, first thing I'd strongly recommend, is to set your process date to your employee's pay date. As with any statutory payment, the amount is calculated up to that pay date, but it can't be paid for any future periods. So first thing I'm going to do is I'm going to click change process date, and I've already got mine set to my monthly pay date, which is going to be the 31st of January. Now, as mentioned, there are two ways of recording the sickness. We are going to start with the absence diary. So let's use employee 1 in this example. So I'm just going to open the employee record. Go to employee and then employee record. Then I'm going to click onto the absence tab. So this is the employee's absence diary. And before I enter their current sickness, I'm just going to check their qualifying day pattern. And to do this, I would click on the SSP button at the bottom of the screen here. And then I'll find 3 tabs. And the one here in the middle is for qualifying days. Now, you would enter a working pattern representing Sunday to Saturday and consisting of N's and Q's. And this particular pattern that you're seeing here, N, 5 Q's and an N, represents normal working days of Monday to Friday. You will also need to enter a pattern start date. So this can be any Sunday before the sickness began. And it just means that if you have a working day pattern that lasts more than 1 week, so you might have employees that work on a rota that repeats every 3 weeks, for example, it would mean that you could create qualifying day patterns for more than 1 week. So if the incorrect pattern is entered, you can choose one of the predefined working patterns from this list. So for example, if they worked Monday to Wednesday, it would be this pattern here, N, QQQ, NNN. Or if you can't find a suitable pattern in this list, you can type your own one in just by entering a combination of N's and Q's. And if it is a multi-week pattern, you can continue that pattern like so until the point that it might repeat. Now, I'm actually going to remove all of these extra weeks, and I'm going to set this back to Monday to Friday as the employee's qualifying day pattern. I've got a pattern start date entered. So it's a recent date, well, fairly recent, 2023, but it's a Sunday. So that's absolutely fine for what we're doing. And then to save any changes I've made to that qualifying day pattern, go ahead and click OK. So what we need to do next is to record the employee's dates of sickness. So a couple of ways you can do it from the absence diary. First way you can do it is by clicking diary entry and then set in the absence type to SSP, and then in the second drop down, sickness. And then you would record the dates of sickness that you want to pay them for. So I've got the 12th of January, so they rang in sick on that Monday, and they've actually been off sick for 2 weeks, so up to Friday the 23rd. Now, if it is an ongoing illness, you can enter a date in the future as the end date if you've received a sick note, for example. If not, I would suggest you enter the date you want to calculate SSP up to, and then in your next period, you can continue that sickness and pay the next lot of SSP when that's due. You can enter a comment, This would appear on any detailed SSP reports. And then to save the absence, you'd click OK, and you'll then see those symbols that I was talking about. So we've got the XXX, the 3 waiting days, first 3 qualifying days of sickness, and then we've got the days, the paid SSP days, falling on the Thursday and Friday in that first week, and then Monday through to Friday in the second week. And as the employee doesn't normally work weekends, we've got dashes for the non-qualifying days. Now notice that these absence entries are all in lowercase currently, and that means it's current sickness, so it hasn't been paid or updated in payroll at this point. But once you've updated records for this period and you move on to your next pay run, you'll see that those absence entries change to be uppercase, which means it is now historical sickness. So anything that's current, lowercase, can be amended. So if, for example, I made a mistake and I want to delete this sickness, I can select the dates that I want to delete. I can right-click that selection and then left-click None. As you can see, that's removed the sickness. If I need to put that back on, another way you can do it is to click and drag to select the date range, like I've done here. And if you right-click, you can go to SSP, due to sickness, pop your comment in if you want to, and that has put them back on the diary. So we've got the dates of sickness entered there. We can then close out of the employee record, and when we go into enter payments, that's where we can check the SSP amount. But before I do that, I want to show you the other way of recording sickness. So this might be quite useful if you're setting it up for the first time. So let me select a different employee this time who has also gone off sick this month. So I've got them selected in the list, and from my payroll tasks, you'll see that we do have an option for recording sickness, which will take us into the quick SSP screen, and you'll find the same option from the payroll links section found just here. You can resize, so you can click recording sickness, and that will take you into this quick SSP screen. So it's just a different way of recording the sickness dates. So I know that this employee has rang in sick on Wednesday, the 7th of January. They've been off sick until the 16th, so a week and a bit. And if I then calculate entitlement, you can see details of their qualifying day pattern, what their average earnings were, key dates, and then at the bottom here, a preview of the SSP that's due. Now, if you're using this method and you need to change or check the qualifying days, you can do so by clicking qualifying days here. And this is where you can check or amend the qualifying day pattern. You can also check the average earnings from this screen. So you can see it's been based on 2 monthly payments that were made in the 8-week period leading up to that first day of sickness. So they're earning plenty to be eligible for SSP. Nice little feature of this screen is that you can print it. So you can print the key details from this screen. That's going to look something like this on a report. So you might want to keep this for your own records, perhaps give it to your employee. So it outlines the dates of sickness that you've entered, what the average earnings were, those key dates that we saw, and the SSP that was due based on the current process date. So you might find that report useful from this screen. So once you're happy with the absence entries, you can click on to save and then close. And if I just open the employee record, you'll see that it has created the absence entries, so 3 waiting days, 2 non-qualifying days, and then a full week where SSP would be due. So last thing I want to show you is how you can quickly check the calculated SSP amount. So let's select both of these employees. I've already checked my process date, so I've already got that sent to the end of the month. And if I go into the enter payment screen, We'll ignore the payments for now, so these will need to be adjusted, but let's take a look at SSP/parental leave, and then you get a mini absence diary showing the same absence entries that we saw before, but we can also see just underneath the SSP payable and the SSP weeks. So because this employee has 5 qualifying days in a week, each individual paid SSP day is 0.2 weeks. So we've got 1.4 in total. And based on that flat rate of 118.75, this is the SSP payable. So we can check that we're happy with that. And then we can start thinking about how we're going to adjust the employee's payment. Just looking at the same information for my next employee. So after the waiting days, this employee has been off sick for a full week. So they're getting 118.75 or 1 SSP week. And because it's current entries, it is possible to edit, delete, or add to this absence if you need to at the point you're running payroll. So if, for example, I wanted to tag on an extra week of sickness to be paid this month, I could click and drag to select that extra week, remembering to ensure it's continuous sickness. Go right click, SSP due to sickness. You can see that's now increased to 2 weeks. Or if I've made a mistake and I need to delete anything, I can select the entries I want to delete and right click and select none. So this is where you can check the SSP amount. So that is now everything set up. Let's just go back and recap those steps for you. So there are 2 ways to record sickness entries. You can either do it directly on the absence diary, either using diary entry or the click and drag method that I've just shown you. You could choose to enter the sickness details using quick SSP as an alternative, but ultimately you will all end up with absence diary entries in the employee record. So the X's are the waiting days, the P's are the paid SSP days. Don't forget to also check the qualifying day pattern for your employee to ensure it reflects their working days. And then last thing we just did there is we popped into enter payments to check the current sickness, and we can see the SSP payable and the SSP weeks. So what you need to think about next is adjusting your employees' other payments to accommodate the statutory sick pay. And that's what we're going to take a look at in the next demo. So 2 approaches that you would take depending on what your employee's contract says or your company policy is. So if you have a company sick pay scheme and you want your employee to receive perhaps their full pay for the dates of sickness that you've entered, you can use the make-up basic option to do an adjustment to their salary. So the way that this works is you would enter their full pay for the period you're paying them. The SSP is calculated based on their sickness dates. And then on the summary tab, you can come back, you can click make-up basic, and that will automatically reduce the payments by the amount of the statutory pay. The other way I'm going to show you is by making a manual adjustment. So think of this similar to how you might work out wages for an employee that has started midway through a period or has left your employment before the end of the month. So you would work out what you want to pay them for the days or the hours that they've worked, and you would manually enter that amount against the relevant payment line. So let's take a look at this now. So I've got the same 2 employees selected, and I'm going to go back into the enter payment screen. Now for this first employee, we have an agreement with them that they will receive their full salary for this period of sickness. So you might have a number of weeks of company sick pay that you pay. And I want to use the make-up basic option so that the employee receives their usual salary, £2,500. Now, as it stands currently, because we have some sickness absence entries, if I check the summary tab, we've got the pre-tax payments, which is the employee's usual salary, £2,500, but we also now have the statutory sick pay. So at the moment, they are receiving more than they would normally get when they're not off sick. So this is why we want to use the make-up basic option. So we already have the full amount we want to pay entered on the payments tab. And if it's ongoing sickness, you will need to remember to set this to the full amount first. And then here on the summary tab, if I click Make Up Basic, you'll see a message pops up telling you that you've selected to make up to basic the statutory payment. And to do this, the hours or number value of salary in this example will need to be reduced. Now, it'll show you the first payment line on the Payments tab in this message, but if that isn't the payment that you want to adjust, you can click onto No, and then it will show you the next payment and ask you if you want to adjust that. But in my case, it is the salary that needs to be reduced. So I'm going to simply click Yes to continue. And you can see straight away that the pre-tax payments have reduced and the employee's total gross pay now is their usual salary, £2,500. And it's done that by making an adjustment to the hours or number value, which in turn has reduced the amount. So that's quite a convenient way of making up to basic. And you would repeat those same steps in the next period if they're still off sick. So put the full pay in and click Make Up Basic. Now moving on to my next employee. Again, they are still getting the same salary, but for this employee's contract, during periods of sickness, they only receive SSP. So as it stands currently, we've got the full salary entered. Statutory sick pay is being added to that. But what we want to do is a manual adjustment to the salary. So we only pay them for the days they've worked this period. Now, there are different ways you could calculate this, and I'm just going to show you an example. That's not to say how you would calculate a part period salary, because as I say, there are different methods. But the way I'm going to work it out is I'm going to adjust the salary based on the number of working days in the month and the number of days the employee has actually worked. So I know that in January, there are 22 working days. The employee's been off sick for 8 days. So they've actually worked 16 of those 22. So I'm going to adjust the hours or number value here. I'm going to do 16 divided by 22, which is then reducing the employee's salary to a pro rata amount. Now, if you're not sure how you should be adjusting your payments, please do refer to your company policies or the employee's contract, and that should give you sort of clear guidance on how you do it. So now that we've manually reduced the salary, if I check the summary tab, we can see the statutory sick pay is being added to that. Total gross pay is reduced this month on account of them being off sick. And of course, for those 3 waiting days, technically they're getting no pay. So they've got that 1 week of SSP. So now that we've got the payments entered for these 2 employees, I just want to show you some of the pre-update reports so you can see how sick pay appears on pay slips, payment summaries. So if I just jump into my pre-update reports, and we'll take a look at a pay slip first. So this is just one of our standard layouts. So just like other statutory payments, sick pay will have its own line. And I'm just going to make that a little bit bigger for you. So sick pay is shown here, separate to any other payments. And the salary in this case has been automatically adjusted using Make Up Basic so that the employee's total pay this period is what they normally receive. So their net pay is no different to what it would have been if they'd worked the full month. Second employee, we did a manual adjustment to the salary, which reduced it to reflect the days they actually worked. This is the week of sick pay that they're getting. Deductions have been calculated on kind of this total amount, and that is the net pay they are due to receive. So it's always kind of separated from other payments with its own sick pay line. Quick look at the payment summary part 1. Now I only have these 2 employees selected, so it is only going to show them on the report. But I just wanted to point out that there is an SSP column on this report. So that shows us the total SSP for this month. And once you've ran and checked all of your reports and you're ready to complete your payroll, you'd update the records in the usual way. And once you've updated, if I take a look at the same employees again, you'll see that the absence entries have become historical. So these are now in uppercase, and they can't be edited or amended without rolling back or restoring a backup. And it also records these details. If you go to the SSP section and then click Previous PIW, it records the historical information here. So I can see exactly what start and end date has been used to calculate the SSP, got accrued waiting days, number of weeks paid, and the fact that this qualified for SSP. So really useful screen this for troubleshooting, the Previous PIW tab, which we will come back to later in the webinar. Quick look at the other employee. So similarly, we've got the historical absence entries. Employee has now returned to work, but let's say they go off sick again in the future. So maybe the first week of February. If I record that on the absence diary, we've got the lowercase entries, but notice they're not serving the waiting days again because this links to the previous PIW. It's less than 8 weeks of a gap. So they'd actually receive SSP for all of these days off sick. But the 4-day rule still applies. So if they were only off sick for 3 days, for example, that's when we're seeing the red A. And under the current rules, no SSP would be due for that period of sickness. But that will change from 6th of April of this year. So the rest of your payroll process is to submit the full payment submission in the usual way, any of your other post-update tasks. And just to let you know, unlike parental payments, like maternity and paternity pay, you cannot reclaim statutory sick pay. So this is fully funded by the employer, but it's always good to keep records of the sickness you've paid, just in case there's any kind of query about it in the future. So that then was adjusting your employees' payments. We first looked at the Make-up Basic option, which you could use if you've got a company sick pay scheme. So that works by entering the full amount that you want your employee to receive, and then from the Summary tab, clicking Make-up Basic. And the other way was doing a manual adjustment. You can choose to adjust the hours or the rate in line with your policies on paying employees for part periods. So I just want to finish up by running you through some top troubleshooting tips. So I'm going to advise 5 areas of the program to check if you notice an issue with SSP. So first thing I would always check is your current process date. So click on to change process date, check what that's set to, and just be aware that SSP is paid up to and including the process date, but not for any future dates. So if, for example, your monthly pay date was the 25th of the month and you recorded a full month of sickness from the 1st to the 31st, it would only calculate and pay up to the 25th. And the sickness from the 26th to the 31st would be included in next month's SSP. So make sure you've got the correct process date set. And if you do pay in arrears, perhaps weekly in arrears, I'd always recommend recording the sickness for the dates you want to pay rather than kind of a full block in advance. Next thing to check is your diary entries. So what symbols appear on the absence diary? Are they upper or lower case? And are they what you expect? So you're expecting XXX for the first 3 waiting days, and then a P for any other qualifying day during the period of sickness. If you see in red A's, for example, that indicates that your sickness is less than 4 days in a row, which currently means the employee doesn't get SSP. Next thing to check is the qualifying day pattern. So if you've checked the diary entries and some qualifying days perhaps have a dash on them, it's worth checking that that employee has the correct working pattern assigned and that the pattern start date is relatively up to date, so within the last few years. If there's no SSP calculated, it could be down to average earnings. So you might see messages telling you average earnings are too low. These must be above £125 per week currently. And last area to check, if it's none of those first four, would be the previous PIW tab. So are the dates entered there accurate? Has the employee perhaps already had 28 weeks of SSP in that period? If you've rolled back and you have paid SSP in arrears in the past, you may need to manually adjust some of the previous PIW information. But you can read more on this, and there's a full troubleshooting guide linked in the handout. So do get them downloaded, and you can have a read through that if you ever need to. So that's pretty much brought us to the end of what I'm going to cover in the webinar today, but do stick around as I'm going to let you know about some of the further support that's available. So we do have some other webinars occurring in January. We've got Mastering Mistakes this afternoon with Sarah at 2 p.m. So always a popular session covering rollback and FPS adjustments. We have Maternity Pay on Friday the 23rd at 11 a.m. A repeat of today's session on Monday the 26th, and Nominal Link coming up towards the end of this month. We also have some sessions scheduled in February, so you can sign up to all of these by heading to sage.co.uk/webinars. As always, you can find additional support in our help centre at sage.co.uk/help. And I'd also like to shout out our community hub. It's an online forum for Sage users to share knowledge, swap ideas and solve problems together. It's not just a route to support. You can share your expertise. You can get the latest on payroll updates and connect with other payroll professionals. So over 3,000 payroll professionals connected and got involved last year. So if you want to join them, communityhub.sage.com. Sage University is another great online learning resource, sageu.com. E-learning, certification and bite-sized learning, completely free to create your profile, so do check that out. So I'm going to be going on to mute in a moment. I will come back to you once we've completed the questions and we're ready to wrap up. But for now, I will see you shortly. Hello again, everyone. Just popping back there as we are nearly out of time. I can see we've got a couple of questions still to answer in the Q&A, so we'll try and get some answers out for those before we leave you. But I just did want to mention that you will receive another short exit survey, our usual webinar survey when you leave the webinar. It'd be great to hear any feedback that you have on today's session. We read all of your feedback and we use it to improve these sessions moving forward. And also look out for a follow-up email arriving in about an hour's time. It'll contain a link to watch the recording of today's webinar and also to sign up for our future webinars. So with that said, on behalf of myself and Sarah, thanks so much for joining us today. Enjoy the rest of your day, and we might see you this afternoon for Mastering Mistakes, but it is goodbye for now.